World events don't just make headlines, they hit your wallet hard. On February 28, 2026, America launched strikes on Iran alongside Israel. What started as targeted operations turned into the 2026 Iran war. Oil prices spiked over $120 a barrel. Gas jumped globally. Stocks swung wildly. And now, just today, a temporary ceasefire has been announced. But is the danger over? Or is this the beginning of something bigger for your money? Today on World Proof Wealth, we break down exactly how America's war is already affecting everyday finances worldwide, what history tells us will happen next, and the exact steps you can take right now to protect your money. Stick around, because what you do in the next 30 days could save you thousands. Here's the timeline in plain English. After months of tensions, the US and Israel struck Iranian military sites, nuclear facilities, and naval assets on February 28th. Iran responded by attacking shipping in the Strait of Hormuz, the choke point for 20% of the world's oil. Oil exports from the Gulf were crippled. The war lasted just over a month, cost the US billions, and triggered the largest oil supply shock in modern history. Today, April 8th, a 2-week ceasefire begins. Markets are breathing a sigh of relief. Oil prices just plunged. But history shows ceasefires in the Middle East can be fragile. Here's what it already means for you. No matter where you live, oil prices rocketed from around $72 to over $120 a barrel before today's drop. Gas prices worldwide jumped $1 to $2 plus per gallon in many places. Groceries, plastics, shipping, everything tied to energy got more expensive. Stocks, volatile as hell. Defense stocks soared while airlines and consumer goods tanked. Inflation is spiking again. OECD already warning of 4% plus in the US and worse elsewhere. Even with the ceasefire, damage to refineries and shipping lanes means higher prices could linger for months. Developing countries are rationing fuel. Your savings, retirement, and grocery bill all feeling the ripple. This isn't new. Let's look at history, so we're not guessing. 1991, Gulf War. Oil spiked 100% plus, then crashed after victory. Stocks recovered fast. 2003, Iraq War. Prolonged conflict meant higher sustained oil and inflation for years. 1973, oil crisis. Similar supply shock led to global recession and 1970s stagflation. Pattern: short wars equals quick oil spike then relief. Long or messy ones equals higher inflation, slower growth, and bigger hits to everyday investors. Right now, with this ceasefire, we're in the relief rally phase. But if fighting restarts, history says expect $100+ oil for months and a drag on global growth. Based on history and current signals, here's what to watch. Best case, most likely short-term. Ceasefire holds, oil drops toward $80 to $90. Stocks rebound, inflation cools. Your costs stabilize in 3 to 6 months. Worst case, fighting resumes, oil back to $110 plus. Global recession risk jumps. Interest rates stay high longer. Middle case, fragile peace with sporadic tensions. Energy prices elevated through 2026. Slower growth everywhere. Bottom line, Expect volatility for the next 3 to 12 months. Markets hate uncertainty. Don't panic. Act smart. Here are 3 world-proof moves. Consider oil-related ETFs or commodities if prices dip further. Gold and silver have historically performed well in war shocks. Reduce exposure to pure US stocks. Add international or defensive sectors like utilities and consumer staples. Lock in fixed rates where you can. Build 6 to 12 months emergency cash and review your investments for inflation protection. History shows the prepared investor comes out ahead. America's war showed us again. Global chaos always finds your wallet. But with history as your guide, you don't have to be a victim. You can be world-proof. Drop your biggest question about this war and your money in the comments. I read every one. If this helped, smash that like button, subscribe, and hit the bell. We're dropping weekly analysis so you stay ahead. Your money, your future. Stay world-proof.